Hey gang, this is Mike with MrNoFluff.com, and today I want to talk about subject to investing and the real estate risk of subject to. I'm going to analyze it right now. Now, I'm not going to give you the fluff and bluff where everyone else is talking about. I'm going to give you three exact risks that I have faced buying houses subject to. Okay. First of all, there's a lot of misunderstanding about how to do subject twos. A lot of title companies don't want to do it. A lot of attorneys don't want to do it. You have to do your research. You have to shop around to find someone that has the education that's willing to do these types of closings, draw up the documents like a non-recourse loan, like DOT, deed of trust, etc. Okay, and the right other that kind of disclosures. But if you surf online, many people say that the very first riskiest thing about subject to, okay, is that NOS, notice of sale clause in the deed of trust. Now, before I dive any deeper, all right, guys, before I dive any deeper, I want to explain what a subject to is because many people don't know what a subject to is. Subject to is a strategy that I've been using since 2006 in the last crash, where I'm able to buy houses at a deep discount or marginal equity or no equity. It doesn't matter what the situation is. Buy houses subject to where I just take over the seller's payment and I don't qualify for the loan. I don't assume the mortgage. I don't do any of that stuff. Okay. And all I do is I just step into the seller's shoes and I just start making the payments. The seller deeds me the property, the ownership of the property, and I go making the payments. Now, why would a seller want to do this kind of situation? Well, they have to be a motivated seller. There's two types of motivated sellers out there. We have emotional and we have the financial motivation. Financial motivation means they're just in a tough situation. For example, they lost their job, or there's a death in the family, or they're behind in their payments or something like that. Emotional motivation could be they have money in the bank, they just don't want to deal with the problem. Like there's a death in the family, or the parents' kids died, they don't want to go to the house. Whatever the story is, okay. It's emotional motivation. Like they're going through a divorce, they have the money, but they just want to get rid of the property. So a subject to strategy is basically seller financing, where the seller is willing to be your bank. That's why with a subject to investing, I don't need a bank, I don't have to have credit, and I don't need all the purchase price to buy the property because there's already existing credit or existing loan in place. And the seller is motivated. Maybe they're behind in payments. Maybe they're not behind in payments. It doesn't matter, but they're willing to just deed me the property, the ownership of the property, because they don't want to deal with it anymore. And I'm creating a win-win situation because I'm willing to make the payments instead of the house going to a foreclosure, for one example. Now, I'm going to share with you right now three risks that I have faced in subject to, and it's none of the stuff that everyone talks about online. Like number one, due on sale. I've never faced that. I bought many rental properties subject to. The bank has never called the loan on me. Now, what is NOS? Notice of sale. It's in the DOT, deed of trust. So in the deed of trust, there's a clause that was placed in the 1980s, roughly, okay, because interest rates were at that time like 18%, and people were just allowing other people just to take over their payments, right? So the bankers lobbied, they put new laws in, they put new clauses in their deed of trust, basically a contract security instrument that says that if the seller transfers the deed, for example, to me, that the bank has the option to accelerate the note. The bank has the option to call the note in due or foreclose on the seller. They'll give them 30-day notice, they're foreclosed. So yes, that is a risk that the seller faces. And that's also a risk that I face. But since 2016, 2017, 2018, not one bank has ever called the note on me. I make the payments. Now, if the bank called me and said, "Hey, did you take over this guy's payment?" I'm going to tell them, "Yes, I did take over." I'm not going to lie to them because that's fraud. I'm going to tell them the truth. But the banks have never called me to ask me. When I send them the paychecks for their monthly mortgages, they don't care. They just put it in their pocket. Even though on the top of the monthly checks that I say, the name is different than what the previous borrower name is, they just take it, they deposit it, and that's in the story. So the what's floating on the internet to do on sell is definitely a risk factor, but for me, it's never happened, and I think that risk factor is like point 0.1 to 1%, where I have 99 chances to have other problems buying a house subject to, for example, like renters not paying rent, or I'm getting hail damage. So those are a lot higher probabilities as a landlord buying property subject to versus the bank calling me my note. Now, here's the three situations that it's not on the internet. No one talks about it. That if you ever have subject twos that you may encounter. Okay. The very first one, I had a couple, I bought their house, they divorced, right? 6, 7 years later, they got back together. Okay. Now they wanted to buy a house. But guess what? When they went to the mortgage broker, when they went to a bank to get a loan, the bank put their social security in there and says, "Look, you already have a mortgage with this company, and it shows on your credit, so you're not going to qualify for a loan." So then they called me and were very upset, saying, "Mike, we want you to cash out this loan." And I quickly reminded them in the paperwork that I cannot guarantee when I'm going to cash out the loan. Okay, it may take 3 weeks, it may take 3 months, or it may take 30 years when the loan retires because I don't have a crystal ball. So if I take over someone's payment today in 2019 and the market tanks, right, 2020 significantly, and the house doesn't have no equity, well, I can't do anything about it. I don't have a crystal ball. I'm not God, right? But what I do promise is to make the monthly payments year after year till I retire the loan or till I cash out the loan. And that's what I will do. But I'm not going to promise them to, like, I'm going to sell this house in 3 months or I'm going to cash you out in 3 years. I don't promise anything like that. All I promise is to make the payments because I don't have a crystal ball. I may want to truly sell in 3 months, but the market changes. What can I do? I can't do anything. So going back to the story, one of the risks of subject to is that seller situation will change. At that time when I bought the house, the people were going divorced. 6, 7 years later, they were together. They got back together. Their income was now justified to buy another home. However, that underlying mortgage that I took over was still on their neck, on their shoulder, which they already knew before they did this deal because we told them about it when we went to the closing. The attorney made them sign an affidavit. They understand this, so it was fully disclosed. But the situation is that they still called me and said, "Mike, I'm having this problem. We want to buy a house." And they called me like 2 or 3 months, and I told them what exactly needs to happen. Like I told them, when you go to your banker, you have to explain to them that you've sold this property and this is not your liability and that is my liability, and I have bank statements, check stubs to show to your bank, to your new lender, that I am making the payments and not you. And so what really happened is the seller went and did what I told them, took my documents, showed it to the new lender, and the lender now qualified them for a new loan. So I had to do some, education for the seller, explain it to the seller. I had to bring some documents to show that this debt was not the seller's anymore, that I am making the monthly payments. End of the day, the seller was happy. He was able to get a loan. Okay. So nothing happened there. Now, I had another situation. Okay. This seller, I bought their house again 6, 7 years later. Their situation has changed. They realized that they kept going on to the online banking because they had access to it and I had access to it because it's their mortgage that I'm making payments on. They realized that I have so much equity in this property. Now they were knocking on my door saying, "Mike, I need you to cash out this loan or I'm going to call the bank and let them know that I sold the property so they can accelerate it." So they were using that as a black, you know, what is it called? What's the word? I don't even know. Blackmailing me, trying to cash out the loan because there was like 70, $80,000 worth of equity and it cash out the loan, or they want to rat me out to the bank. Okay. Now at that point, I had many options. I could have refinanced it. I could have sold the house and put the 70,000 in my pocket. I could have just said, "You know what, sir? I'm just going to take you to court because we went to the title company. You sign an affidavit. You sign all this. marathon of paperwork says you knew what's going to happen and you were okay with that. Now you're trying to use this. Now I could have done all this stuff, but guess what I did? You know what I did? This was the time that I was just tired of, accumulation, gathering stuff, and I was giving my stuff away to the homeless people. So I said, Mr. Seller, you want this house? I'll just give it to you. So guess what I did? I just give him the house because I didn't want it anymore. I had made monthly cash flow from it. Now, did I help the seller out? Absolutely, because when I bought his house, he was behind 2 or 3 months. I can't remember. It's been so long ago, and he had gotten into a motorcycle accident and he couldn't work. 7 years later, I've created $80,000 in equity. I don't want the property anymore. I'm about to go on my journey of what Buddha did, what Christ did, right? And I was like, you know what? You can have it. So this gentleman made a $70,000. Now, if I didn't have the compassion and love, I didn't have to do that. I could have just sold the home really quick because I still had plenty of time because to sell the property. I could have refinanced it out. I could have got a new loan. I could have done so many different things too. I could have, but I didn't want to because at that time I was exiting. I was just letting go of everything I had. And I said, you know what, seller, you helped me get a positive asset for 6, 7 years. I made positive cash flow from it. There's $80,000 in equity. God bless you. Good luck to you, right? And I just let him have it, and it was no big deal, right? Now I did make him go work for it because he wasn't very ethical. He didn't perform like he said he was going to, so I made him work for it a little bit. But at the end of the day, he was able to get that $70,000, $80,000 in equity, which I'm very happy that he got it because I didn't want the property anymore at this time, anyways, because I was giving my stuff away. Now, if you guys have any questions about the risk analyze of a subject to, leave a comment and I'll answer it for you. So let's talk about the first two. We talked about a seller that came back 7 years later and says, Mike, I'm getting back with my wife. We want to buy a house. We can't. And, they were bugging me. So I showed them how to solve that problem. Okay. So that's one risk of subject to. You may buy a house 10 years later. The seller might now have a different situation and they want to go get a house and they may not be able to get it unless you provide documentations to their lender. Says, look, I'm the one that's responsible for it. Okay. And if you don't have that education, you don't tell them, they don't do that, they might be upset at you. But that's why I always tell the seller up front, look, you're not going to be able to get another loan. Well, I don't tell them you're not going to be able to get another loan, but there's a good chance you're not going to be able to get another loan. Okay. Because when they try to get a new loan, it depends on their credit score. It depends on how much money they have in their bank. It depends on the debt to income ratio. So I don't want to tell them they can't get another loan because there's so many variables involved in it, but it decreases their chance of getting another loan. So I let them know that up front. But again, I have clients that sold me their house subject to, they were able to get another loan as long as I provided their new lender with documentations that I'm the one that's making the payments and it's not their liability. Even though the debt shows under their social security number that my company is making the payments and we have 12 months of record to show them. And once I did that, they were able to get a new home. The second type of risk buying houses subject to is that the seller situation may change down the line and they'll realize you have 60,000, 70,000, 100,000, $200,000 in equity and they'll may be jealous. They're like, hey, no, I want this. And they're willing to rat you out to the lender. Well, if you're ever in a situation like that, like I am, there's a lot of options to do, right? You could fight the seller because, they deed you to the property. You went to the title company. They sign all this paperwork, and you can go fight it. I usually don't like to do that. Two, you could refinance the house. I had the options to refinance. I didn't want to do that. I had the option to sell the property, right, with the MLS, with the real estate agent. I could have sold it to another investor for cash. I could have done so many different aspects with it, but I didn't. Okay, so, but those are the options. So if the seller ever comes back and threads me, they're gonna, you know, tell the bank, well, first of all, if it goes to foreclosure, your credit is busted, buddy, right? Two, it's not going to be my credit because I have a non-recourse loan with you. Okay. But really, that's not what I'm saying. But I'm just letting them know that, hey, I have a non-recourse loan with you and I'm making the payments on this property and the payments are current. If you rat me out and this house goes to foreclosure, please understand that it's your credit that's going to get messed up, not mine. So I let them know that because it's the truth. Right. But I still have the chance to sell the house traditionally. I still have the chance to refinance the house. I have the still chance to do so many different things. Okay. Sell to a cash investor for a little bit less price to get quickly sell it, liquidate it. So there's a lot of different options. So I don't think that is a really a bad option for me if the seller comes back down the line and they're dissatisfied. Okay. Uh, and the third risk of buying a house subject to that I've experienced is that down the line the seller may be upset at you. Maybe down the line the life even gets worse, right? And they're just looking for someone to fight. You seen people like that. They're real bitter. They never hit their life dreams. They never hit their potential, and they're constantly down. And they're just looking to fight with everyone they see in the world. They think everyone's a scam. They think everyone's trying to screw them over. And they're trying to fight with everyone. And I had one seller that 6 7 years later messaged me like, "Hey, I'm gonna rat you out to the bank." I said, "You know what? Go ahead and do it because it's gonna be on your foreclosure." Guess what? Never heard back from the guy ever again. Okay, so buying houses subject to, simply put, it is risky. Now, let's talk about risk, ladies and gentlemen. You can't be your dreams if you're not willing to risk. Let me say that again. You can't be your dreams if you're not willing to risk. If you want to be a book writer, you want to be a real estate investor, you want to be a real estate agent, you want to be an entrepreneur, you want to go ride a bicycle, whatever you want to do, you got to risk. And so many people say, Mike, well, this is risky. Mike, this is risky. Absolutely. If you want to be an entrepreneur, it's risky. If you want to get in your car, go from your home to work, it's risky. A lot of people dying on the road every day in your town, on your highways, driving. It is risky, right? So life is risk. And if you want to be an entrepreneur, you want to be a real estate investor, you want to be your dreams, you got to accept risk. Risk is part of life. So if you're looking at everything like this is risky, then you'll never do it. If you want to get money from a hard money lender, it's risky. If you want to do a subject to, it's risky. If you want to get money from a traditional lender, it's risky. It's all risky, right? It's risky. Having a job is risky because they could fire you. The business can go bankrupt. Government can do tariffs, and the company can go bankrupt. That could downsize. So, you know, what am I trying to say? Life is risky. So when people make that argument to me that, hey, this is risky, I just know that they're not the right type of people to be their dreams because it's a given. It's like a math equation. Like it's a given. If you want to be your dreams, there's risk involved. End the story, right? Now, for me, I do a calculation of risk and reward. When I go if I borrow money from a hard money lender, I do the calculation of the risk. Is this risky? If I go borrow money from let's say, Bank of America, it's going to be even more riskier. If I go and do a subject to, for me, the risk is this much. So it's all risky. But when I do my risk analyst, subject twos are the least riskiest for me. I'm not giving you financial advice. I'm not a CPA. I'm not an attorney. I'm none of that stuff. So do think for yourself. What I'm trying to do is plant a seed so you can do your own homework. So you know there's other doors out there if you choose to go research it. Okay. That said, when I analyze a bank traditional loan, when I analyze a hard money loan, when I analyze a subject to, for me, the subject to deal wins every time. Every time. That's why I'm willing to do more marketing to find deals that have massive equity and they're still willing to do subject to. If I was a fix and flipper, I would still be able to find subject to deals. It all depends on how you sweeten the tea. Now, many people are willing to borrow a hard money lender, pay 6 points, 5 points, pay 18% interest, pay interest only interest, but they're not willing to sweeten the tea and give a little money to the seller. Well, I realized that if I went and got a traditional loan from a bank, or if I want to borrow hard money, I'm going to have to fork over a lot of money to these guys. When I give a quarter, when I get 10% to a seller and sweeten his tea, so I could create a win-win situation for me and him. So if the seller has the house fully and clear, I sweeten the tea. If the seller has a mortgage, I sweeten the tea. And they're the one that wants to do it because this side is more glamorous because the tea is sweetened and it's a better choice for them. Okay. Uh, for example, I can buy your house. Let's say your house is worth 100. I can buy your house for cash 60, where I'm willing to give you 100 for your home, but it's going to be subject to, or what I call terms, right? So I'll let the seller choose. If the seller wants deep discount, no problem. I'll throw some money into a briefcase. We'll see you at the title company. If the seller's willing to get more of an asking price, well, many sellers are willing to do if you know how to negotiate, if you know how to give the offers. Now, that brings me to the question. If you don't know how to negotiate, if you don't know how to give the offers, if you don't know how to find these motivated sellers, how to negotiate, structure, then highly recommend joining my profit sharing, guys. We're having a flash sale. This is the $3,000 a month coaching that I'm letting you have it right now for $71. Okay, there's a limited amount of seats, and the price is going up very, very soon. So $71 a month gets you 1 hour every week, 4 meetings a month. I'll let you download all my business tools that actually work. You get to ask me any kind of questions you want, and I hold your hand till you find a deal. It doesn't matter if you're looking to do fix and flips. Instead of borrowing money from a hard money lender, I can show you how the seller can finance you. If you're a fix and flipper, instead of spending all that money to pay a wholesaler 10 grand, 15 grand to bring you a deal, why don't you just learn how to do it yourself? Imagine on the first deal, you've already saved a lot of money. On the second deal, you're now in the home run field. Okay. If you want to be a landlord, well, you can go borrow money from a bank. You can raise money, from your friends and family. You can go to a hard money lender if you choose to. You can put it on your credit cards, or you can just sweeten the tea and have the seller finance you. Not every seller is willing to do that. I'm not saying every seller is willing to do that. It's the minority. So out of 10 sellers, one are going to be motivated. Okay. So the truth of the fact is there's not that many sellers out there. And if you're using the traditional ways to find them, like probate, like sending out yellow letters, or all the other stuff everyone else does, your odds of finding them are very, very small. They're out there, but it's small. If you use creativity, like what you're made of, your odds increases as long as you use your imagination. You can do it all for free. So profit sharing, highly recommended. $71 a month, 4 meetings a month. You could ask me any kind of questions you want. It's a live one-on-one, small group settings, and my students are loving it. I just had a gentleman, Dan. I think his name is Dan, if I'm not mistaken. He just joined up. He just came to his very first meeting. He's already emailing me. He says, "Hey, I already found multiple sellers. Send me the Ninja phone script. Send me the Ninja phone script. I got appointments to talk to these people." And that's how my stuff works, guys. It's very, very simple. It's very, very powerful, and it gets results. The only thing is, you have to have the hunger to take action. My stuff is not going to work just because you pay for it. It's kind of like a gym membership. If you just pay for the gym membership, you never show up, you're never going to be your dreams. End of story. But if you want to pay the gym membership and you want to show up, I'm your guy. One warning, I'm a no fluff guy. I don't work for money. I'm not taking no one's shit, right? I'm only looking for ethical, hungry, honest students. If I think you're unethical, I'm going to give you the boot. You're not even going to be able to get in. Just because you could pay doesn't mean you can get in, right? I'm looking for people that are going to do deals to change their lives, to come on my channel and encourage other people to be their dreams. I'm not looking just to make a bunch of money. I was already doing that. I let go of my stuff. I just told you, I just give $70,000, $80,000 to a home seller, right? Who would do that? Okay. Because I'm highly passionate about changing lives. I've already had success in the success world of materialism, accumulations, and I wasn't happy. That's not the meaning of life. So I let it all go. So I'm not looking to make money. I want to make some money. 90% of my stuff is free. 10% I make food on the table. But at that 10%, I'm very picky who I work with. If you don't think you have the ethical, moral, hunger, drive, then don't join the profit sharing. Okay. But you can join the academy. The academy is just $99 a month. You get access to all my best selling courses for just $99 a month. Simple. Academy.mrnofluff.com. But if you're hungry, you're motivated, you're ethical, you're passionate, then join my profit sharing. Not everyone's going to qualify just because you pay your, if not everyone's not going to qualify. But if you do qualify, I'm going to change your life if you're willing to take action. I won't let you down. Guys, click the like button. Much love to you. Peace.